going on, my good people? Otis L. Milton here, the Mortgage Millennial, with my partner,
Carlden Lainfiesta, the Mortgage Fiesta.
And today we're here to talk to you about something super important, right? One of the biggest barriers to home ownership, at least in my business and your business, I mean, just across the country, is down payment, right?
Money.
Right. Sometimes people have the job, they have the income. Credit could be strong, and credit's one things that we could actually fix, right? Fairly easy in most instances. But down payment isn't always the easiest thing, right? So there is a new down payment assistance program, and I'm going to talk to my partner about it because he's really been the backbone, one of the backbones in terms of down payment assistance, continuing to push it, continuing to learn the different programs to be able to help our community, right, and all of our clients and partners. So we're going to talk about this program, right? So, tell me the name of the program first.
Dreams for All. Is the name of the program.
And is this a county program, city program, state program?
This is good throughout the entire state of California. There are income limits per county, but it's good anywhere within the state of California.
So I wanted to talk to you about really why do you think this program is going to be bigger or have a bigger impact than some of the other programs? Because there's tons of programs out there.
Right. Well, most programs cover just the down payment. That's number one. And the minimum of the down payment. So, right. Which in most cases are either 3% for conventional if you're a first-time home buyer, and 3.5% if you're FHA. So this program is 20%, right? Oof. So that's going to make a big difference, especially in this environment. Rates are a little higher. To get that payment down, you're going to need a huge amount of money on your down payment. So This program gives you up to 20% that could be used towards your down payment, towards your closing costs. So that's a game changer.
Absolutely. Absolutely. So let's talk about that 20% piece, right? Because there are people still think that you have to have 20% to buy a home. Right. That's not the case. Right. But what else does it do when you put down 20%?
So the biggest component that you get to eliminate is mortgage insurance. So most of the time, if you're putting down 3 to 5% down, you're going to be subject to something called mortgage insurance. And mortgage insurance is to make sure you're educated as what you're paying the servicer, the person you're paying, the bank you're paying your money to for the next 30 years. They have insurance called mortgage insurance. So if you default on your payment, you're insured for the money they lent you to buy the house. Typically, mortgage insurance could, depending on the sales price of the home, be somewhere between $100 to $500-600. It just depends on the purchase price, and in some cases, your credit score as well. So having 20% down eliminates mortgage insurance. So that way, that also decreases your monthly payment, along with the 20% is decreasing your loan amount as well. So both of those things are going to make it more affordable for most people.
Right. So working in unison to keep that payment down, and the mortgage insurance affects DTIs too, right? And so having no mortgage insurance as well as a larger down payment really gives you more buying power.
Exactly.
Right? So you could afford maybe $50, $100, maybe $200,000 more depending on the scenario by having a lower loan limit and as well as eliminating that mortgage insurance. So this is good news. See, we haven't seen anything like this. So programs coming out next week. Let's talk a little bit more about some of the details that we do know. There's some details that haven't all the way come out yet, but let's talk about what we do know.
Sure. So first things first is there are income limits. I don't know them all by heart, but I know a few counties by heart. Okay, so Los Angeles County, $180,000. That's the maximum income for the people that are on the loan. It could be one person, two people, whatever. Whoever's on the loan, the maximum amount of money that those parties can make is $180,000. Okay, in Los Angeles County.
Correct.
If it's in Riverside or San Bernardino, you got about $173,000. There are probably 50 counties in all of California, so I don't know them all by heart, but we could definitely share that information with you very easily. But there are income limits. Okay. The other thing is it has to be a conventional loan. So this is not going to be for the low credit score people. So you're going to be looking, they haven't really released the exact credit score. We believe it's going to be about 680, but If you're below that, we could try to rapid rescore you or help you improve your credit score to get up to that. But this is going to be more so for people who are like 680, 700 plus credit score, because you have to approve for a conventional loan. There's also debt to income ratio. Right. So 45% is for most people. If you have a higher credit score, you could go up to 50%. So that means that we could use up to 50% of your income, your gross income, to qualify you for a mortgage. And your gross income is your income before taxes. Those are some of the, you have to be a first-time home buyer. It has to be a one-unit property. So that's like your single-family residence, your condos, your townhouses, your PUDs. If you know what those are.
Planned unit development.
Yeah. Exactly. So those are some of the main details.
Dope. So again, this is dope, right? Yes, you can't buy multi-unit properties, but again, this is giving you the down payment to possibly get in a home that without you may not be able to afford.
Exactly. Like there's a lot of people that are qualifying for like $500,000, $600,000.
Right.
So that's something to kind of consider potentially, so it's going to take up your amount.
Facts.
But I want to, but yeah,
So let's talk about one detail that you didn't mention. I'm glad you didn't, because I think this is going to be the biggest thing, because this is not a lot of programs have this. Some do, some don't. I know some of the local ones do. Let's talk about shared appreciation, right? So shared appreciation, because obviously they're giving a large down payment, right? So there's got to be a way for who's offering this money for them to be kind of able to recount that, especially in California. We've seen large amounts of appreciation over the last couple of years, which makes it beneficial for them too, right? And so can you explain kind of briefly, but to where people could get a good understanding of what shared appreciation looks like on this program?
Exactly. So one of the people ask me like, what's the drawback? Like, what's the catch?
What's the catch?
So basically, this is a state program. They give you the 20%. It's not free money. It's a loan. So the first thing is you do have to eventually pay back that 20%. Okay. It wasn't your money in the first place, so you're not losing money on that part, right? So that's one thing to consider. The second part is what Otis is mentioning, the shared appreciation. So give you a number. I'm gonna give you an example, okay? So basically, you buy a house for $500,000, and the program gives you 20%. That's $100,000. So you're paying on a loan of $400,000. Okay, this $500,000 house that you buy in 5 years, let's say the value goes from $500,000 to $600,000. Okay, and then at that time you decide to sell the house, or even if you decide to refinance the house. The state wants 15 to 20% of that appreciation, okay? Not the equity, because there is a difference, okay? Equity includes what you paid on the mortgage. They don't want that. That's your money. Right. But they want the appreciation between what you bought it for and what you're selling it for. They want 15 to 20% of that amount. Now, in this example, if you're selling the house at $600,000, that's $100,000 of appreciation. You're going to owe to the state $15,000 to $20,000, but you get to keep the other $80,000 to $85,000 that you otherwise would not have been able to have. Right. On top of that, it's really going to help a lot of people get into a home. Right. And that's really what this program is for those people who can't afford an $800,000 house, but they can afford a $650,000 or $600,000. Right. So this down payment, along with it eliminating mortgage insurance, is going to allow those people to qualify for some of the higher price homes that exist today. Yeah, and we've seen why that is, right? We talk about appreciation, why that they offer this program with that in there, because we see, especially in California, the appreciation growing, right? So this is an opportunity to help people get a home, but at the same time, help the people that are helping you get a home make their money back, right? So they can continue to make programs like this. So this is amazing. So let's talk about, when does this program go live? When is it available? Who offers it? Right. It goes live on Monday, okay, the 27th, March 27th, so next week. Yep. And as far as banks that offer it, most of your major traditional banks will not offer this. Credit unions will not be offering this. You're going to need to go to either a direct lender or a mortgage broker to get a program like this. On top of that, you want to act quickly because if you're in the state of California, we are approved to offer it. And by the way, this is being done by the CalHFA, California Housing Finance Association, Housing Finance Agency, excuse me. I've been a preferred lender with CalHFA. We've done a lot of CalHFA loans. CalHFA is one of the most popular down payment assistance programs in the state of California because of the ease of which they can close.
Right.
And typically don't run out of funds, but let's be honest, 20%, that's a lot of money.
Yeah.
It's not going to last very long.
Yeah, and the money is allocated specifically for this program. Right there, before you know it, those funds can shrink up very, very quickly. Right. So that's why you want to get on this ASAP. So I hope this offers some more information. We're probably going to do live on Monday when it goes live. So we'll go live and answer some questions that you guys might have. But again, this is an absolute game changer. So please make sure you're reaching out to Mr. Fiesta or the Mortgage Money myself. I hope you guys enjoy this information. You guys know my motto. Until next time, one love.